Hey everyone, and welcome to Earnings Cheat Sheet for Friday, May 3rd. It's Alexis, Garcia, and Ed Carson here, and we'll be taking a look at some key upcoming earnings reports to help you prepare for the week ahead. And Ed, may the 4th be with you, my friend. And I think we could use some of your Jedi magic with the current market right now, but tell us what you have for us today.
I think I'm more interested in Cinco de Mayo right now than
I think most
maybe it's
traders are after the
I
last few weeks.
want to take a look at a few stocks. The earnings season isn't quite is furious this coming week, but still important. We're going to look at Palantir, look at Constellation Energy, and also take a look at Datadog.
All right, well, let's dive in with Palantir. The software defense company is scheduled to report its Q1 earnings on Monday, May 6th. And let's take a look at that cheat sheet. Earnings are expected to rise 60% to 8 cents per share, and revenue is expected to climb 17% to 615 million. And here's why we're watching Palantir. We're going to be keen on the defense company's commercial sales. We'll also want to see how many customer conversions they're getting from their AI boot camps. Those two things will be an indicator on the demand for their artificial intelligence products. And Palantir stock has been trading between some support and resistance levels. So tell us about Palantir, because it seems like the big question is really how much AI is going to be a growth driver for them, particularly in commercial sales.
Yeah, the commercial's been more of the growth area for a little while, and that's getting close to about half of the business. So that's starting to become more and more moving the needle. That's what drove the stock in the last quarter. But yeah, this has been an AI play. It's a favorite among retail traders, and I think we're looking to see examples of software. I mean, this and maybe Datadog. Are we seeing these software names really doing well? It's one thing for NVIDIA to sell these chips, but somebody has to, are they going to generate enough value from that? It's really value from the stock market investors' perspective. But this one is holding up, but not leading for sure in the last few months.
All right, well, let's take a look at the chart. And I'm on the daily here, Ed. And bears have been focused on this decelerating revenue growth here over the last few quarters. And as you kind of pointed out, Ed, shares have been trading between that 21.85 buy point and that 50-day moving average. So, when you see a pullback like this after a breakout, is that constructive?
It's not constructive to go into like that. It's one thing to pull back to the 50-day line. It's even arguably to the top of the base, but it fell all the way back in. That's a big drop. I mean, from 2750 to 2033. So that wasn't great. I mean, the market hasn't been ideal. A lot of AI plays have come back, but that's just because everybody else is not having a great time. If you're an investor, it doesn't really matter if others are struggling. Palantir is down. So this is a key area. I mean, it's like, yeah, it's like has to get above that 50-day line to start feeling strong, start building the right side of the base. I suppose somebody aggressive, depending on how the market is, if you go powerfully through that, that could be a place to buy. On the other hand, if it drops back below the top of the base after earnings, and there's a risk that it could go a lot more. I mean, this stock has surged in the last quarter after earnings, but sometimes it goes the other way. So definitely have to watch for that. Then, if anybody's still holding on to this, they might want to be cashing out if it starts breaking lower here.
All right, well, let's hop on over to Constellation Energy Group. That group is one of the nation's largest producers of carbon-free energy. And why are we talking about this? Well, of course, it's what's being used to power these AI data centers. And the company reports its Q1 results on Thursday, May 9th. Earnings are estimated to rise 393% to 143 per share. Revenue is also expected to climb 4% to 7.9 billion. And here's why we're watching Constellation Energy. Again, this is kind of one of those picks and shovel stories of the AI wave. And we'll be interested to see any commentary on AI data center energy usage. The stock is also working on a new base and trading around that 21-day exponential moving average. So, Ed, what's the story here with Constellation Energy? Why are you interested in this one?
You laid it out. I mean, it's amazing. And one of the interesting things about when there's a transformation in society, whether it's in the stock market with technology, other things, is that you don't know all the ramifications, what's going to happen there. And it's amazing with the utilities, which are among the most offensive, dull companies out there, all of a sudden it's like, hey, the demand. I mean, people are talking about massive demand, energy needs to power these AI data centers. On another sector would be cooling, like air conditioning things. There's a lot of cooling companies that are now seen as AI plays. Constellation's on the heating side in the sense of heating up those AI chips. And so it's just a transformation. This might be a sector that, at least for a while, does very well because the demand will be so high that should be very strong for pricing. And there's a shift towards renewable energy as well. Now earnings, which have sort of been lackluster, they're supposed to really take off. So those are all positive signs for a stock. And it's just a reminder of just how things are changing, how even with mundane stocks are all of a sudden looking interesting in that way.
If it's boring but making those profits, I'll take it. Let's go ahead and take a look at the chart. And as you said, building that flat base with a 198.83 buy point, and really trading here at that 21-day line. Ed, is it good to see this kind of action, especially after last earnings when it had such that big jump?
Yeah, absolutely. It's been very strong. It ran up quite a bit, not just on the earnings, but even beyond that. And it's held those gains. I mean, it basically, and all of that. So really strong. You can look at that relative strength line, had a big move and really had been trending up for a year. And now it's just been sideways for the last few weeks as it consolidates. Really hasn't fallen much at all when a lot of stocks, including a lot of AI stocks, have fallen back. So this one has been very resilient. Very tight action, just setting up, not giving too many head fakes either. So it's not luring people in. It's been very constructive. Ideally it would move out on earnings, provide an opportunity for people to buy.
All right, well, let's go to the next name on our list, which is Datadog. They report earnings on Tuesday, May 7th, and the software company is expected to see Q1 earnings rise 21% to 34 cents per share, and the street expects revenue to climb 22% to 590 million. And here's what we're watching with Datadog. We're going to see if they can deliver revenue growth for a sixth straight quarter here. And we'll want to see if they're snagging any new clients as their rivals Splunk and New Relic are being acquired. So Ed, what's the story with Datadog?
I mean, Datadog is sort of in the web monitoring, app monitoring, cloud-based. There's a number of stocks in this space. Datadog is not supposed to show revenue growth that accelerates this quarter, but maybe it will. And so that'd be one of them. It's another one that has, like almost every software company, is AI adjacent. The data analytics, it's been tied with Amazon. So there's a lot of stocks in there. So this one, it'll be important for a lot of other software stocks. It's not like the level of a ServiceNow or Microsoft, but there are a number of stocks that could key off of Datadog. And it'd be good to see because software hasn't done particularly well in the last few months.
All right, well, let's take a look at the chart. And as you mentioned, Datadog building that flat base with a 138.61 buy point. And it's, trading right here at that 50-day line. And, had a breakout, kind of did a little bit of a run and now building another base. So Ed, what are your thoughts about this chart?
I mean, while the relative strength line has sagged, it's actually, if compared to other software names, it's basically at a high. So it's been outperforming, or at least, the software names. So that's been positive. The stock sort of came down right to the top of the prior base. So unlike Palantir, this one did find support basically at those levels. This is sort of a base on base formation. If you look on a weekly, I mean, there were opportunities to buy in that last base, but you can see it was a deep base. It ran up sharply up from the right side. It wasn't easy to get into this. There were ways you could have, but often what will happen is you'll see this deep, sort of ugly looking base, honestly, and then you'll see another base that'll be right next to it or right on top of it. And so this is constructive. And yes, it'd be nice if the relative strength line was higher, but obviously the sector's having a little bit of weakness. So that would be, it's showing relatively constructive action. This is definitely one that, if it could get above last week's and the recent highs, that would probably serve as sort of an early entry, potentially, as opposed to waiting for it to get all the way up to the top, if the earnings are strong. And if this doesn't work out, well, that would be a pretty good sell signal if it starts breaking below the lows of that base.
All right, Ed. Well, we took a look at some of the big names on our list for next week, but let's do a lightning round of some other upcoming reports on our radar, starting with ARM. The chip maker reports on Wednesday, May 8th. And tell us about this chart. I'm on the weekly here. It hasn't been looking very pretty over the last few weeks.
Yeah, this had a mammoth move on the last earnings report, but has given a lot of that back. This one suffered in a way that far more than some other AI stocks. The benefit for ARM is that it makes low-powered chips, and so when I talked about how hot those AI chips are running, people would love to see a more low power in there, but it is priced pretty high. It needs repair work. I mean, it would take a lot. If it surged up 40%, yeah, I would be getting closer towards the highs of the base, but it would look sort of weird. This is probably going to need some time to come back.
All right, well, let's take a look at Arista Networks, which is scheduled to report on May 7th. And again, this one, was looking pretty good, but over the last few weeks, really undercut this 10-week line here.
Yeah, there was some weakness or some sell ratings a few weeks ago, and there was some positive news, and it did rally in a prior week. There could be in part because a lot of the big companies, including major clients, Microsoft and Meta, announced they're really spending a lot of money on AI. So that should be good for ANET. But, is it just need time to rest? Because this is one of the strongest performers in 2023 and much of 2024. You can see that relative strength line had a big, big run. Does it need a rest? Or can it bounce back? Like if they say, yeah, we're seeing a lot of demand, we're going to do a lot better than people expect, this could go on another run. So this is quietly one of the better stocks of the AI, market rally from the beginning of 2023.
All right, well, next up, let's take a look at Astera Labs, which is also due to report on May 7th. And again, not much history here, but we're seeing the blue dots. We can look at the daily chart for a better view. So what are your thoughts here on ALAB?
It's acting relatively well, but it's an IPO. It's and it's right amid when the market was coming down. So that was hard for it to hold. I mean, that's in that situation, but it's bounced back. It actually could have a handle heading into earnings. It looks like that will be. This is what happens. The thing is, it's acting fairly normally, but normally is crazy. It's like going on a roller coaster that makes you a little nauseous. It's like that's normal. It isn't necessarily something you want to be part of, but this one is showing something. It'll be interesting to see how this does. The earnings estimates look great, but we've never seen an earnings report from this company before. It's always nice to see like something. What can they do? It's a heralded draft pick, but let's see them actually get out onto the field. It definitely one to watch here.
Yeah, so in that instance, Ed, when there's not really much of a track history, like what do you recommend that investors do to really handle or manage that risk?
I mean, it's tough. Look, it has to be your risk tolerance. A lot of people say, I don't really want to deal with IPOs. I'll wait for that stock to make a real run and pause, or maybe it'll break down and then finally come back a year later. That like Facebook did. But you hear it set up. It is forming a base. It is wild. It is volatile. You could do an options play on the earnings, or you could just wait to see if it can break through some of these levels on earnings, because then you'll have then you would have some technical and fundamental sort of confirmation of the story. The technicals are looking okay. We'll see on earnings. This could look very bad. We may not see these levels for a long time if the earnings don't do well. But it does come to your risk tolerance, but looking and buying carefully and being precise and being ready to get out if things don't go your way.
All right, well, let's take a look at Uber, which is also reporting next week on May 8th. And I mean, talk about a little bit of a turnaround, but, fading here recently. So what are your thoughts on Uber, and what do they have to show in this earnings report?
Yeah, I mean, part of the reason they're falling lately is because there's concerns that Tesla will come in with a robotaxi, and that's just sort of a wild card. You don't know what Tesla will do, and that some of that might be years off. They might try to come in some other fashion. This was doing great, and maybe it's just taking a break here. Obviously it needs to have strong earnings and get back above the 50-day line. It looks so strong for a while. And that's something to note. Sometimes stocks will look good, they'll look good, and then they won't. And this is not broken, but it may need time to rest.
All right. And finally, let's wrap up with a look at Shopify, which again reports earnings on May 8th. So, Ed, what's your take on the chart here?
This is another one. This one's come down pretty far too. It had sort of moved out right ahead of earnings, and that's scary. This is why we talk about it. Look how strong it was before earnings. Somebody must know something. Well, no, they don't, or they didn't know the right thing, because the stock came down right on earnings. All those people who bought right into earnings, they took an instant hit, and it hasn't been able to come back. And so this one needs to show that it can battle back. The growth has been slowing again a little bit on the revenue side. After there were reasons why there was tremendous opportunities, they did a whole change in their business a little bit, but it needs to get back above the 50-day line. Probably needs to do more than that, build more. Maybe that 83 area can serve as a double bottom buy point if it can move up. But this one has been lagging for a little bit. So interesting report. This has had big moves. And sometimes it can make big moves off the bottom, but it definitely want to be waiting for earnings on this one.
All right, well, that wraps it up for this edition of Earnings Cheat Sheet. And if you want even more market analysis, be sure to tune into Stock Market Today with Alyssa Korm. That goes live after the closing bell. And be sure to follow us on X or Twitter at IBD Investors. We'll be posting a curated calendar of all the earnings reports on our radar over the weekend to help you prepare. And thanks so much for watching. We'll see you next week.